And now, this is the part that's beginning to worry people. No minimum credit score. Like I mentioned earlier, starting November 16th, Fannie Mae will no longer require a minimum credit score of 620. And I quote, "This is designed to expand access to mortgage credit, particularly among borrowers with so-called thin credit files or non-traditional credit histories." On top of that, they're also going to rely on their own comprehensive analysis of risk factors to determine eligibility. Now, in terms of what risk factors they look for, the home builder Pulte said that our underwriting standards are the same, and that they could now look at alternatives to your credit file, known as a Vantage score. This looks at your payment history outside of your normal credit profile, and it might include things like your rent payments, utility payments, phone payments, and anything else that might not show up. And the way they see it, this would allow a lot more borrowers to qualify who otherwise would have been left out. Like, just imagine that someone's been paying their rent on time, utilities on time, their bills on time for over a decade, but they just got their first credit card, and because it's so new, their credit score shows as 600. Well, prior to this new rule, they would have been left out, despite being an otherwise great borrower. But now, they could be included to get a mortgage as long as they meet every other criteria. Basically, this doesn't mean that lenders are removing the risk entirely or giving loans to anybody with a pulse, but it does mean that they're no longer reliant on credit scores if everything else looks good. So what's the risk? Well, in terms of what I think, this isn't a surprise whatsoever, because lenders have been doing everything they can over the last few years to issue more loans and bigger loans, like increasing loan limits and allowing prior appraisals to be used in loan approvals. So it makes sense that they're getting rid of the minimum credit score requirement in favor of being able to use alternative data. From my perspective, this doesn't necessarily mean that banks are going to be giving money to people who otherwise can't pay for it, but it does tell me that enough people were getting disqualified that lenders wanted to change the rules to be able to push more people through. So is this starting to become a repeat of 2008?